low of it, okay? And then look at the bodies respecting the upper half. Yes, we can travel down to the low of it, which it does there, and then we hit the lower quadrant on that candle. Now think about this, folks. Tell me, where in volume profile is that? It's not. How about Wyckoff? Nope, it's not there either. Supply and demand? Nope. Elliott wave? Nope. Put a pitchfork there. Do it beforehand. Okay, do it beforehand. Don't go back and try to pick the highs and lows to make your pitchfork look like it worked perfectly there. And that's not how that works. Okay, believe me, I did pitchfork garbage. Okay, as a 20-year-old, I swore up and down I was going to pick the right trend line highs and lows. It's a facade. It's a facade. When you stop arguing against
Well, that was a complete arrogancy and having no respect for others, especially for Wyckoff, which is Richard Wyckoff, which is a genius. So, and when you present this chart, it shows how much you don't understand charting, technical analysis, and chaotic systems. And now I'll correct everything about his market structure. That's not the way to chart, but I'll just show the right blocks and the right ranges, not his made believe ranges. And I'll try to explain, but just one point, strong point. That's not how to chart the DXY. You don't start for the 1 day on the DXY. You have multiple higher time frame ranges interacting with the price. That it's like shallow. It's not understanding how to analyze the DXY. So, but I will do it on the 1 day just to show you on the 1 day how he made his mistakes. So he used the laddering system, which is finding a range which supports other range, but he didn't take under consideration. What he did, he just take the 1 day and he's looking at this, and by this he's trying to understand whether the price is going up or down. So that's very shallow, but I'll show you how to do it properly. So first of all, we have I'm searching for the higher top of the range. With he didn't find, he didn't use it, but just to do it right, this is the sell block. Got violated here with this candle. It closed above it, so now this is our sell block. We'll rotate to this one later. You just want to get the range. We have down here this buy block, so we have a range, but we can see this block didn't mitigate with the price, is hanging, and this block did gotta respect. This buy block did gotta respect from the price, and while he did it, he created this buy block. Okay, so when price interacted with this buy block and his COG, he created this buy block. But now I can see price didn't mitigate it with the block. It directed hit the top range. it didn't mitigate with the price and the liquidity inside it. So this is not my buy block. This is not what price interacted with. So I'll delete it and I'll find what it did interact with. And now I see this daily sell block, which held the price all here, got broken with this candle. So this was a sell block, got broken, turned into a unmitigated block, and price reacted it and proceeded upwards. Let's just delete this. So now I have the true range, and I know the price broke important sell block. So this was his sell block, and he broke it. So when he broke it, he created this one, this sell block. I'm just doing the laddering. Of course, when we chart, we don't do this kind of noise. There's too many blocks, too many, is it? And we just interacting with the linear horizontal structure. So it's very shallow, but I'm just showing you how ICT was wrong. Okay, so in this sell block, he created this buy block in. Okay, and again, what I told you, direct hits doesn't exist, so I know it's not the range. Price didn't interact and mitigate with this range, and this buy block is not active, so it's not a buy block, but this sell block that held the price here, and when it was broken in this, it flipped and polarized and turned the price here. So now I have a closer range, and now what I'm doing is called reduction of ranges. We have a couple of ways to do it on the horizontal linear structure, but that's one of them. Otherwise, we have this range. So now when we reduct the range, we have a smaller one. We have this. Okay, we can have this minor range, then this minor range. Okay, this range and this minor range. Sorry, my English is a little bit. Okay, so let's continue. Now he glorified himself, the ICT, that he found the exact hit of, I think, this, if I'm not mistaken, this candle. Let's see. Yes, this candle. He said, I can do it, but it's wrong. Watch his range. This range is wrong. It's not the range. This is the range. And then what we'll do, called reduction of this range itself. How we do it? We go to the 4 hours and look inside this, the 4-hour block. So we have this buy block, price interacted with, created this one, and voila. So those two, let's just mark them with yellow so that we know they are 4 hours, not 1 day. Okay, so this is the 1 day, and this is the reduction of the 1 day. The 4 hours we gave us the price. If this wouldn't give us the price, we go into the 1 hour, and then in the 15 minutes, and then create another reduction, and that's called fractality. Okay, and we can do it with every single block here and get the pinpoint accuracy we want. Okay, and we can do the same like we did to here in the 4 hours, and find the 4 hours in the 4-hour block in this range. Okay, and then we have overlapping ranges, and this give us even more confluence, and there are confluence points, so it doesn't end, it's just a start. But this is just the correct structure, not the maple leaf idiotic one he made here now, which is Fibonacci use is completely wrong, because the internal, when you use on internal candle range or wick or whatever, especially wicks, which is you don't randomly use a wick. His wicks that he marks are completely unnecessary and meaningless. So, but when you do mark a range and you understand, you need to understand what are you doing with the range, what are you seeking in this range. So you have a linear, you have the, let me just show you. You have this, okay, with the distance are equal, okay, so this is the linear, and we have the fib, which is the ratios have a context, but natural context of Fibonacci ratios. So one have a constant context, and the other have Fibonacci rhythm context or pace. So when you use internal, especially in the 1 day, you don't use the linear, meaning the 25% and the 75% he uses. It's completely mistake. When you do use it in the 1 day, when you have to use it, use it like this. You choose the right candle, and the right candle there's a meaning behind how to find, and logic how to find the right candle. But when you do, you have one on the downside and one on the top side. When you do find this candle, you can just do like this and use this pace. But then again, it's unnecessary. Don't do it, and you don't use it, because it causes a lot of noise and distractions. But you can see, you can pause the video and see how it perfectly fits on every single wick and close and open of a candle. And the meaning of it is just that we just have to explain it right. It actually has no meaning. We actually don't use it, and we don't even use this, because we are where we go to a higher time frame, we don't use all those things. But the thing is, this is the external, how to use the external system of the Fibonacci when you use a range. So when you use a range, you use the external, and the one they use the external, not the internal. The internal looks like this. Let me just show you. You take a range. I take a random range. This range has no meaning. This is internal. Internal linear paces, because the paces are linear. And if I take the Fibonacci, they gave me the Fibonacci ratios logic. Okay, and that's how you use it. But again, we need to know exactly when to use it to get the right properties and the right ratios, which will help us to understand the price dynamics. Okay, so I hope this was clear. The next video I will take this 1 day structure and go into a higher time frame and show you how to really do it the proper way, not Mickey Mouse, Donald Duck, whatever he did here, and I'll show you the right way. Before I end the video, I just show you he put here the buy stops, like this is the liquidity or the stop hunts, and I don't know. The liquidity lies everywhere, guys. It's not in a specific, but there is a specific place. There is a pool, and the pool is always on the third candle, meaning this is the buy block, this is the spring, and this is the liquidity candle. So the liquidity resides, the 1 day liquidity, strong point, the 1 day liquidity resides here. Okay? And the internals are here. We have one here, which got dipped. You see the dip in the pool, and the highlight again. This is the pool, this is a pool, a dip inside, clearing at least 50% of the pool, and moving and continuing upwards. And then you can reduce the pool like this. After we punch the 50%, you can take the bottom 50% as the new sell side pool, liquidity pool that generating again. So I will explain in future videos. I can't explain everything in one video, but this is the logic, and I hope you liked it. Next video I'll show you the higher time frame analysis, which is completely magic. It will show you, blow your mind, the Fibonacci ratio, how you use them, how we locate prices that pulls the price like a magnet, and you will see it in your own eyes. So it's beautiful. So cheers everyone, and peace. And just for the thing with ICT, when you interact with a chaotic system, remember always to be humble, and never and always give respect to others, because the chaotic systems are, you can't act like you control it, like so it sounds kind of stupid. So be humble and appreciate others, like especially like Richard Wyckoff, which was icon, like the. Okay, so peace, and cheers everyone.